All right, let's talk about BCE, one of Canada's telecom giants. Right now, they're in this kind of weird situation. They're facing some really serious challenges, for sure. But at the exact same time, some experts are looking at them and seeing this huge overlooked promise. So that's the conflict. That's the big puzzle we're going to piece together here. And yeah, if you just glance at the surface, things look, well, pretty rough. BCE's stock valuation has been heading south for a few years now. You don't need a PhD in finance to see what this chart is saying. The market is clearly not happy.
And this is where it gets really interesting. Because on one hand, you have the hard facts. Revenue is shrinking, competition is absolutely fierce, and they're not adding new customers like they used to. But then, on the other hand, the analyst report we're looking at says, nope, the company is actually way undervalued. How can that be? It's a total paradox.
So that's the million-dollar question, right? How can both of those stories be true at the same time? How can a company that seems to be struggling also be a potential hidden gem? That's exactly the mystery we're going to solve. Okay, first up, let's build the case for concern. We really need to get our heads around just how tough things are for BCE at the moment. Let's start with a cold, hard number. In the last quarter of 2025, BCE's core service revenue actually fell by 1.5%. I mean, this isn't just a slowdown, that's their main engine sputtering. And what about new customers? For a company like this, that's the lifeblood. In 2025, they added just 100,000 net postpaid customers. The really valuable ones on contracts. The problem? That is half, literally half, of what they added just the year before. A massive drop. So not only are they adding fewer customers, but, and this is like a double whammy, they're actually earning less from each one. The average amount of money they make from a wireless customer fell by 1%. That's a huge problem for their most important business. So you're probably asking, why is all this happening? Well, it feels like BCE is getting hit from every direction. There's a new national competitor, Cubicore, and they're just hammering down prices. At the same time, changes in immigration policy mean there's a smaller pool of new people who need phone plans. Meanwhile, old school stuff like landlines, well, they're basically going extinct. And to top it all off, their main rival, Rogers, is doing a better job of signing up new internet customers. And this quote from the analyst's own report from the Bears Say section, it just nails the problem. Quebecor's arrival is putting a huge squeeze on BCE's ability to charge what they want. And that basically puts them in a corner where it's incredibly tough to grow. Okay, wow, that sounds pretty bleak, doesn't it? But remember that paradox we talked about? Let's flip the coin now and see why, despite all of that, the analyst still finds a really powerful case for confidence. So, if the present looks so rough, what's the secret to BCE's future? What's this hidden value the analyst sees? Well, it all boils down to one powerful idea, something called an economic moat. Think of it like a medieval castle. An economic moat is that big, deep ditch filled with water that keeps invaders, or in this case, competitors, out. For BCE, that moat isn't made of water. It's built from its massive size and the huge cost advantages that come with owning such a giant network. Seriously, just think about it. To really compete with BCE, you'd have to build a whole new network of fiber optic cables and cell towers from coast to coast. The cost would be absolutely astronomical. That huge infrastructure, especially their top-notch fiber network, that's their moat. It's a barrier that's just incredibly difficult and expensive for anyone else to cross. And the Bulls Say part of the report really drives this point home. After spending a decade and billions of dollars, BCE's fiber network isn't just big, it's better. And the analyst believes this is going to let them start winning customers back and, over the long run, operate more cheaply. This is the bedrock of their long-term strength. Okay, so you've got this short-term pain fighting against this long-term protective moat. Now let's look at a big real-world decision they made that puts this whole tension on full display. A perfect example is BCE's huge, multi-billion-dollar bet on a US fiber company called Ziply. This was a massive move, and let's just say the analyst has some pretty mixed feelings about it. On the one hand, the deal gets them into a whole new market in the US where they can grow. But on the other hand, and it's a big but, it was super expensive. It added a ton of debt, and the analyst is kind of worried it's a big distraction from what they should be focused on, back home in Canada. So what does this all mean for the future? Well, the analyst is definitely not predicting some overnight miracle. The forecast is pretty cautious. Tiny revenue growth, landlines continuing to disappear fast, and only small gains in subscribers, all while having to spend more money because of that Ziply deal. The message is pretty clear. This is going to be a slow grind.
So we've seen the bad news, we've seen the good news, we've looked at their big strategic gambles. Let's bring it all home and get to the analyst's final verdict.
And here it is. Despite all those headwinds, all that pressure, the analyst puts a fair value estimate. That's what they think the stock is really worth at 45 Canadian dollars. Now, at the time of the report, that was way higher than where the stock was actually trading.
So why the big difference? Well, the analyst thinks the market is making a classic mistake. It's called recency bias. It's basically looking at all the problems happening right now, like the price wars with Quebecor, and assuming they're just going to last forever. The market is getting spooked by the short-term battle and completely missing the long-term stability that economic moat provides.
So the bottom line from the analyst is this. This tough, competitive environment, it's a phase. It's a storm that will eventually pass. And when the clouds clear, BCE's moat, its fundamental strength, its massive network, it's all going to still be standing strong.
So the whole case really hinges on one big belief, that BCE's moat is strong enough to take these hits. The analyst is betting on long-term stability while the market is panicking about the here and now. And that leaves us with a big, lingering question, right? In a world that's changing this fast, how long can any company's defenses really last?